And welcome. This is Chartwise Women with Ellen McGonagle and Erin Swenlin, brought to you each and every Thursday afternoon. Welcome. Today we are going to be talking about a new year and new leadership. So we're super excited to share with you what we're seeing and what we are anticipating going into this new year. And of course, a little bit has to do with the election, a little bit has to do with the economy, and we wrap it all up in a nice package for you and get you in front of some of these newer areas and where we are looking and focusing on. But let me go ahead and say hi, Erin, and check in to see how your week is treating you.
So far, so good. The trading has been pretty nice, I must say.
Yeah, it's interesting. We're seeing these names just really pop. And again, it's just all about being in those areas that are percolating. And I like to equate it to a nice bowl of popcorn that's starting to, as these names crop up. And really, we're getting in. We're going to be talking about primarily about these newer groups and how you can capitalize on the move into them, as well as an anticipated further move. I actually did a 2021 piece that was began airing yesterday, and it was all about what to anticipate in 2021. The head of Bloomberg's economic strategist was part of the panel, and some of the other well-known names, and it was quite enlightening. So I'm going to share some of that as well. So
Excellent.
Yeah, so let's go ahead and jump right in. Take a look at our wisdom of the week, which we do, of course, each and every week. My line is at the top as far as my comment for this week, and that is that if you can get in front of this rotation, and when those rotations do take place in the market into these newer sectors, of course it will greatly enhance your performance. There are periods of where we will see particular groups have these extended moves, but every once in a while we'll see a shift in that leadership. So of course, we are going to talk about that. Erin, your wisdom of the week?
Certainly. And so by getting on top of that rotation, you know that if you're in a winning sector, you're going to find the winning industry groups within them. And in those industry groups, you're going to find those winning stocks. So you want to go into those sectors where you're going with the current, if you will, rather than bucking against it. You know, you want to be able to have a higher confidence level in your investments. And the best way to do that is to be inside a winning sector and a winning industry group. And I know we're going to talk about some.
Yeah, that concept of don't be the salmon that goes against the tide.
Absolutely.
Swim with that tide. Let it take your portfolio to new heights. So I am sharing my screen here, and just a very quick view. I thought we could start out by looking at these S&P sectors. You of course can get this on StockCharts.com, and taking a look at the year-to-date performance. We're about 3 weeks in now, and I've found this to be it's something that I think, Erin, you and I knew, but to have it in black and white is to confirm what we are seeing here as far as this new leadership that is really began taking shape at the end of last year, but is really coming into its own. So this first area is the energy area, up 11.5% year to date. Consumer discretionary. Now, healthcare, Erin and I had a great show last week about that. If you missed it, I would urge you to go into YouTube and take a peek there. And then financials and materials. So outside of healthcare, each of these 4 other areas are cyclical. They have everything to do with an economic recovery, which is a phase that we are currently in. And then, of course, some of Biden's initiatives are also directing funds into certain areas as well. So we're going to get into all of that. Erin, how about we start with energy stocks?
Yes, let's do that.
So we're seeing a lot of vibrancy there. I'm going to go ahead and begin by just go ahead and let's do this. I wanted to share with you chart of the price of oil, because when you look at the energy group, this is barring the renewable energy, this is more oil related, it is going to key off of the price of oil. So this is the Brent crude oil, the per barrel pricing, and it really has been on the rise. I talked about this since the November period, but most important here is this move over the last 2 weeks above the price of 50. Now that $50 per barrel price is viewed as the benchmark. If we can sustain a price above 50, that's very advantageous because it is at that level. It's widely believed at that level that oil companies, these producers, let me go ahead and share this with you so you can get a better view with me, because these energy producers, when that price is above 50, they can reach profitability. So very, very nice here that we are now almost at $56 for the price of oil. So that is certainly constructive. So let's go ahead back to this sector summary. And we were talking about energy, discretionary, financials, and materials up here in the forefront, these cyclical areas. So what we can do from here, of course, is go ahead and check out those underlying industry groups. Coal, I know we covered that a while back, but I'm going to sort this by that StockCharts technical rating, and we can see that the equipment and the exploration oil, our companies are up here in the forefront. Again, that $50 per price. That's when these oil companies start spending money on equipment. They do begin increasing their exploration. And there are other dynamics here at play with OPEC and the reduction of oil output. That's a huge piece of the puzzle here. The next piece we need now, of course, is an economic recovery. People start driving more, going on airplanes, so the use of oil will conceivably be increased. So I have that year to date. We can certainly narrow it down a little bit more, but by and large, this scooter rating is going to be really quite helpful. DVN is a name that I got with my MEM Edge report. We put the stock on our buy list back here in November as it reversed this downtrend, broke above these moving averages, and also broke out of this very lengthy base. I believe we're up over 50%. It is pulling back quite a bit today, but I would argue that that pullback to this 21-day moving average may very well be an entry point. I'm just going to show you an intraday, and then Erin can share some of her insights. This is what you're going to want to be on the lookout for as far as determining whether this pullback, we're looking at a 15-minute price chart. Erin has that weekly trading room, and I know she looks at some of these intraday charts as well. But what you are going to want to look for is a price break back above these shorter term moving averages. We can go back to this January 12th through the 14th pullback. This is the kind of dynamic you're going to want to see to know that this pullback could, at least super near term, be reversing. But a lot going on in these energy names, and they're seeing some really nice moves. Erin?
Yeah, actually, I have a few that I'll share from my diamonds, my historic diamonds, just some of the ones that I've recently, picked. At least you can see here back in November, I picked a bunch of them. I was looking at some in early January. Of course, we've got the renewable energy. I know I've talked about that quite a bit. But I know you were talking about Halliburton looking better before the show. So let me I'll pull some of these in here and look at a few. So right now with Halliburton, we had the nice breakout and it came in. This is about where I came in on it. It was back here. So we're at a loss right now, but you can see it's come back down to some very interesting support. And I would be watching that 50-day. And if we can see a bounce off of that, we might get that PMO, that momentum to shift and look a little bit better.
Share some insights on that Halliburton. They did come out with their earnings earlier this week. This was another big winner for MEM Edge out of that November reversal. Their numbers were actually pretty good. Their margins are rising. Halliburton did a lot in the way of restructuring, investing in technology. So now I think it's just a case of whether there is a belief that things have turned for these oil guys. Sorry, go ahead.
Right. And so we're on some of these names, we're seeing some really great pullbacks here, and that offers some excellent opportunities in some of these areas. So I'm pretty excited about it. Look at this one. It's really a nice setup right now. We have that double bottom that's shaping up on OGE energy.
Mhm.
And you can see that we've got the change in momentum and it's moving to the upside. So
Look at that yield.
opportunities in that area.
5% yield, and that's another piece of the puzzle that you're going to see with a lot of these energies names if they were able to retain. I believe Halliburton did slash their dividend, but some of these others really have nice high yields that they're offering. I think the case is going to be today's pullback is all about Biden. He yesterday announced they think he's going to kill the Keystone XL pipeline project.
Yes.
Rejoining the Paris Agreement. So that might put a damper on some of these oil stocks, certainly over the near term.
Yep, you can see I added the events on here. So you can see that the dividends are coming out. And actually, we saw a bit of an increase here. So
that's constructive. Yeah, very good. All right. So there's a view of some of the energy names. How about we take a brief break here, and then when we come back, we'll dive right into some of these other sectors.
Excellent.
We'll be right back.
All right, we are back. And as Mary Ellen said, we're going to take a dive into consumer discretionary. We're finding a lot of strength in that area. And I'm going to focus on the home builders. This has been an interesting industry group, and we're starting to see some really nice movement in there. We've had some really great moves here. I put home builders on my radar for my Diamond subscribers on Tuesday, and you can see that they've pretty much taken off. Now, I know that this could be a little daunting as to, well, when do I get in? Is this a bad time? Well, when you look at this momentum, it is oversold, and we've certainly seen higher readings on it. So it could still be pretty early. I mean, what I would do is be watching it and look for some sort of a pullback that maybe you could take advantage of it. That was one. Horton was another that I was looking at. This one's hit some overhead resistance, but you have a nice double bottom here. So this one might be one you could take advantage of before, since it hasn't taken completely straight up into the air like some of these others. But you can see really nice movement, breakouts from these falling wedges, increase in the momentum. In this case, this one, the RSI is positive and not overbought. And we did just get this breakout. So I think there are a lot of areas.
So are they coming out with numbers? Or I know that there was a report earlier this week relating to housing starts.
Yeah, absolutely. I mean, we're seeing this is a very vibrant area of the market, as you like to say. And with housing starts increasing, we've seen a lot of moves to the suburbs. And of course, there's only so many houses in the suburbs, but a lot of the people who have some money because they're moving out of a city and moving into something a little more affordable, possibly, you've got the need for more housing. And so with these new homes coming out onto the market, I think that this is going to be a really strong area. And I know someone was also talking about lumber, and the fact that that's been increasing. It also tells you that this is a strong area.
Yeah, you can look at Weyerhaeuser as an example. But yeah, so lots of great charts there. And I think you mentioned you put them on your diamonds list, so people that are subscribers were able to get into some of these nice moves here.
on Tuesday. I even had a subscriber actually write me and say, excellent, I bought in the morning, I sold in the afternoon, and I paid for your subscription for the entire year with a
I
little change left over. So I thought, yep, see, there you go.
love getting those emails. Absolutely. Paid for your service one day.
Mhm.
Yeah, so I can share my screen quickly if,
Yes,
yeah, so there's one other area that we'd be remiss to not share. There's been a lot going on in consumer discretionary, but home building is one area. The other, let's go ahead back to this wider view, if you will. Take a look at the year-to-date numbers. And it doesn't mean it's over. There's still, but take a look, automobiles up here in the forefront. A lot of you might think Tesla, but Tesla's been really flat for the last 2 weeks. Let's drill down, and I'm going to share with you some of the one of the best names. This, of course, is NIO, China related, but here's Tesla up here, and actually, this is not flat. This is up 20%, but let me just share the chart with you very quickly, and you'll see what I'm seeing here as far as very recent flatness. But let me share with you the next top scooter. This is another big winner with my MEM Edge report. This is GM. We did get into the stock back here pre-earnings. The stock had been in an uptrend, pulled back very nicely to this 50-day, identified it as a strong buy in this period, and it really has advanced. They're doing a lot with electric vehicles. They had a big presentation last week. They're in conjunction with FedEx, where they are going to be producing by the end of this year electric commercial vans, and that's a huge addressable market. It's called the last mile in transportation. When we order goods online, as everyone is doing, that last mile, there's a big need. So take a look at the volume characteristics here on GM. It was up 16% last week. I think we're up another 12% this week. So this is where I like to put that 5-day simple moving average in there, and that's going to be your guide. Take a look. That's that blue line here. Any pullbacks to that level, an ideal buy point, because we are in a very confirmed uptrend. When I see this nice volume characteristic, a little bit overbought here, but definitely get GM on your radar if it's not already. So I did want to share that.
excellent choice. I like that chart.
Yeah, and Ford's been on the move too. It's not just GM, but of the two, I am partial to that General Motors.
Well, with the the EV, the electric vehicles, and that market coming to maturity, if you will, that's really where a lot of these car makers have started to focus as well, and investors, traders like it.
Yeah, it's a very vibrant area, similar to housing. When this pandemic first broke, there was just this huge move to vehicle sales and home sales. And it was just so against what you would normally think, because people were losing their jobs. There was a lot in the way of unemployment and certainly uncertainty into the future. But the American consumer has come forth, and they're making these big purchases here. So yeah. All righty.
What else is on the list?
Yeah, I think we're going to take a look here at some materials and financials. And Erin, I'm going to ask you to talk about materials. I know it's one of your many expertises.
Yes.
So yeah, if you could share with us.
Absolutely. So I do follow gold very closely. There's honestly a lot of mixed emotion out there regarding gold. Let me get to that gold chart first. Apologize for that. There we go. I'm going to look at the dollar gold. So this doesn't have the action of what we're seeing today, but there's a lot of, there are those of us who are finding this to be a really nice pullback and an expectation to really start seeing a move to the upside with that RSI just about in positive territory. So Carl and I, my father, who I work with at Decision Point, we're both starting to feel a lot more bullish about gold and even the gold miners. But one of the areas in this materials section that I really wanted to discuss more than any is the lithium stocks. And actually, I'm going to start off with the global lithium ETF. I know a lot of you like to invest in ETFs rather than expose yourself to one particular stock. So this is the lithium ETF. Really, you can see it's just been on a really great move. And we finally got the pullback. I noticed it back here, but I just kept feeling that, we weren't getting the kind of pullback. I just expected it to come back a little bit more. Well, we're finally getting these pullbacks on these stocks. And I think they're really set up nicely for entry. I presented these to my Diamond subscribers yesterday, and you can see that one was up about 1%. LAC, Lithium Americans Corporation, was up 4% after we suggested it yesterday. And you can see that we've got and the reason I went for it was we got this huge pullback. It was about a 17% pullback, and now we're starting to see the move back out. And then finally, the other one is Piedmont Lithium. And that right there is now just starting off. And you can see we had a big pullback yesterday, and now it's starting to come back up. We'll want to see the breakout here, but given these very positive indicators, I wouldn't be too concerned. And the overbought conditions, while those can be a problem, you can also see that they can stick around for a long time. So I'm not overly concerned about this.
And I think we were talking earlier, Erin, that move into lithium has everything to do with battery. Is that right?
Yes, the electric vehicle batteries for your phone. I mean, all of that. And of course, with the solar cells and that kind of thing, this is an area that we certainly want to keep an eye on.
Sounds good. Okay, I'm going to go ahead and share my screen. We'll just take a quick look here at financials before we move on to our next segment here. So what we are looking at here, I'm taking us back to that sub-industry grouping here on financials in the financial sector year to date, and we can see some of these outperformers here. For my work, I have been focusing on bank stocks. We can take a quick look here at the group chart. Again, this is another area that my MEM Edge report back here in November, late October for some of the individual stocks. This is all about the recovery trade because we can see the gap up here on the news as far as the vaccine. The thinking here is that the loan default rates for these bank stocks were diminishing with each new vaccine that was being announced, certainly as people ideally get inoculated against this horrible virus. So what we saw here more recently is really explosive moves. This week we are pulling back, and that's very orderly. I can share with you some of the names certainly that I had put out for subscribers as far as coming out of this nice reversal and breakout. This is Comerica, one of the larger regional banks. And we can see, actually, it's not pulling back as much as I had thought, but certainly a lot of these bank stocks currently are in overbought positions. And I'm bringing them to your attention now because on these pullbacks, there could be ideal opportunities. Let me go ahead back into that grouping and see if I can get more specific as far as individual names that are pulling back, because again, going forward, you do want to have some representation within banking stocks because not only recovery, it's interest rate related. There's what's called the yield curve, and it is steepening in a very bullish fashion. So I'm taking us down here to these large cap names. I want to see a stock that has a high scooter rater, but is pulling back. This is one of the ways that you can screen for potential candidates. And I can share with you, certainly JP Morgan has been a great name. That is up there with a nice high scooter. They came out with numbers, and it is pulling back very orderly out of this overbought position. So maybe a little bit more of a pullback to this prior breakout point would be ideal. So that's a look at those bank stocks. Erin, shall we move on and out of these cyclical new areas that we've shared with everyone today and talk about our final segment?
Yes, let's do that.
All righty. we're going to head right into, yeah, that happened. And this is a segment where we take a look at headlines around the globe. This comes to us from the UK, where an owner, he spent $300 to his dog was limping, and he was very concerned. His best friend, his dog, took him to the vet and found out that the dog was not injured in any way. It was everything to do with the owner, who did have an injured leg and was limping, and the dog, in sympathy, was limping with him on their walks. So
They're the best. Dogs are the best.
I honestly, really, I mean, you just can't show a better example. So let's take a look at some stocks. I'm going to share one, and then Erin, if you're inclined, but here's a look at Chewy, CHWY. And this particular stock, this company, is a digital online only provider or seller of all things animal related. Their really big strength is that they have the subscription base. So if you do purchase dog food, for instance, from them, they will urge you at a reduced cost to get on this subscription. So each and every month, they are continually providing you with dog or other cat food, and the sales have really exploded. I mean, it's amazing. I know that I use the service, and to have them deliver these heavy cans of food and do so at a great price is quite constructive. But we can see the stock is in a very confirmed uptrend here. They did come out with earnings recently, pulled back to this 21-day. That seems to be an ideal buy point for Chewy. So if we do get down to that 100 level, because overall in the longer term, I'm going to pull up a weekly chart here, the stock is very much in a confirmed uptrend. So I'd be a buyer on a pullback there. Erin, I'm going to pull up another name that provides medicine digitally. You can purchase and have them delivered. Oh, but not such a pretty chart. This is PetMed, PETS. The stock, okay.
Well, it's hitting some really interesting support, and that does look a little hammer-like on that candlestick. So yeah, it could be getting ready to make that oversold turn.
I think oopsie, my drawing skills here, but you're referencing this. And yeah, you're absolutely right. So we could be hitting it. This is all about, they did report earnings a couple of days ago, but take a look. This RSI is potentially turning. So we're going to need to see confirmation from that MACD as well, that that this break, but not the most attractive. Let's take a look at another company. These guys are veterinarian related. ZTS is actually, this is animal medicine.
Yes, I actually buy a lot from them.
Do you? Oh my goodness, I hope your pets are okay.
Yes, Leo has really, really bad allergies, and the only thing that's worked for him is their Apoquel. There's just no other meds out there right now that can help like that one does.
Oh my goodness. Well, here we are, but it really is kind of in a go nowhere environment. Just not a lot of vibrancy for this particular name. We can take a look at one last name that is maybe a little more interesting. This is actually a veterinarian. They are also in that animal care space. Appears to be in a nice confirmed uptrend. So this could be a little more interesting with positive RSI, MACD up here above that net neutral zero. So longer term, nice upwardly trending type of a stock. So
certainly looks like another one that might be an early mover, given that MACD is starting to turn up just a little bit there.
All right. Well, I think we're going to leave it at that, Erin. We can both go walk our dogs.
Yes.
Oh my goodness. Okay.
At least while it's warm, because it's going to get really cold here.
True, it is. Oh my goodness. Everyone, have a great rest of your week and a great weekend, and we will look for you here next week with Chartwise Women.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.